Hi, folks. Stan Bird here with Technical Tuesday. It's we had the day off yesterday, so today is Tuesday. We are going to talk about relative strength, and there's a number of different ways to look at that. But the reason for this and why it's so important is to do best, you want to find stocks that are outperforming their own industry group and the S&P at a minimum, and that shows you relative strength. But there are a number of different ways to measure relative strength. It's really important to identify strong sectors, strong industry groups, and then the stocks that are strongest inside of those industry groups. And that's where relative strength comes in. It's even more important if the market sells off at some point and we go into a cyclical bear market. Then when we get to the bottom of that, as we come out of it, you want to identify the stocks that have had the best strength, even as the market has been going down, because those are the ones that will lead it out typically in most cases. So I'm going to show you a number of different ways to look at technical relative strength, rather, using technical analysis. So, and there's a number of stocks that people have asked me about too, so I want to get to those as well. But let's real quick take, first of all, I'm not a financial advisor, of course. Anything I say is meant for educational purposes. You need to take responsibility for your own trades. Let's take a look at what the market did today. Basically nothing. It just basically sat there and didn't go anywhere. Pretty much started and ended. It went up slightly, a little bit, might even have made a new high today, but all in all, it really didn't do much. However, having said that, our market bias actually went a little bit up. So the reason is that even though it was, pretty tame, kind of a stable, flat market today, it was just enough because some of these were right on the edge, just enough to push these over into a bullish configuration today. Other than Magnificent Seven versus the Russell 2000, that one went bearish, and the dollar went bearish on a medium term, but everything else just went up slightly, but just enough to push this a little bit higher. And you can see up here, we've got 3 green lights now. Overall, green light, short term, medium term, long term is still yellow, but that's just because it really hasn't moved much at all. So we'll look at a couple of these. Actually, what I'm going to do is I'm going to show you something on the homepage, and this is available to anybody, even without a subscription. I changed up these links right here to the charts, so I'm going to use those to look at them today. First, we'll look at the S&P, and I'm using the ACP Advanced Charting platform from Stock Charts. You can see that, yes, the S&P actually did make a new closing high today, right there. Now, the way these charts now are arranged is they go back about 7 months. They show you the Bollinger Band, which is the blue shaded area, and 3 Keltner channels. The green one in the middle is 1 ATR, 1 average true range. So the average range it travels in 1 day. The blue one is 2x average true range, and the red one is 3x average true range. At the bottom, we have the squeeze. This is just the TTM squeeze, the free one. And overlaid on top of that is the PPO or the MACD. So those are MACD lines, but it is not a MACD histogram. It's actually using the squeeze histogram. So I've combined 2 things here together just to give you a sense for what it looks like. So as you can see with the S&P, this is a daily chart. We have 4 days of a squeeze on the S&P, and the MACD is above 0, which means it's in an uptrend, and it's moving higher. So all of that is positive, but it didn't move much today. So we'll see. We are going into options expiration on Friday, and tomorrow I will do max pain. I'll show you what max pain looks like as we head into options expiration. For those that do not have a subscription to Stock Charts, you will still get this chart, but it won't quite have all the lines. You probably won't get the 3x level. You'll just get the 1 and the 2x level on this. So it won't be quite exactly like this if you do not have a Stock Charts subscription, but you'll pretty much get the idea. All right, so that's the S&P. We'll look at the NASDAQ, same thing. NASDAQ also new closing high today on the NASDAQ 100 actually. So this is the large cap technology stocks. Everything looks the same. 3-day squeeze. It came out of the squeeze, might be firing to the upside. Got a little ways to go to get back to get up to the 3x. So right now it's just about at the 2x. It's getting into the range where it usually pulls back like it did here, pulls back to the mean. The mean is this blue line in the middle. So we'll see if that happens. The Dow looks the same. So there's the Dow chart. It has not made a new high, and it is now just starting a squeeze. You can actually see the Bollinger Band, the blue one, pulling inside of that 1x Keltner channel. That's what starts the squeeze. And of course, you can see down here, it is starting. And then finally, Bitcoin, same thing. Bitcoin 7-month chart, it actually went down today. So, but it's still in the 1x channel. So it's not alarming. It's not really setting off alarms just yet. It is also in a squeeze, and it had a squeeze back here as well. So it's really just gone sideways through this whole period. You can see the Keltner, the blue one is really, I'm sorry, the Bollinger Band is the blue one. It's squeezing inside of the Keltner channel. That's this green. That's when it turns green right through here. And you can see it, the squeeze started right way back here. So it's still in a squeeze. This is going to explode at some point out of this. We don't know yet whether that explosion will be to the downside or the upside, but it is building up strength like a coiled spring right now. So it is going to explode one way or the other. In the middle of this, there's now 2 charts in the middle. The one right in the center is the dollar. So you can see what the dollar went down today. Actually went up a little bit today, but it had been trending down. So it's right in the 2x, negative 2x on the downside. And it is in the squeeze too, but everything looking negative for the dollar. And then a little bit to the outside of the dollar signs is the 10-year note. So now you can see with the 10-year note, it went up a little bit today, but sitting right at the mean, right dead center, right in the middle, and just starting a squeeze down here. So this one might explode one way or the other as well. So the whole market is just treading water, going sideways, not doing much at all. We'll see where it wants to explode to. I also added right in here, if you want to look at the same kind of chart with the S&P and the NASDAQ 100 side by side to see how they compare. This is kind of a way to do relative strength also. So they both look very similar. The S&P came up, actually made a new high right here where the NASDAQ 100 did not. However, right now, both of them are making new highs. So it looks like they want to break to the upside, but we've got options expiration coming, so that could throw a wrench into things. All right, let's take a look at the dashboard real quick. And what you can see is, just like I said, all of these basically hardly even moved. They were positive for the day, but didn't move much. Although the VIX went up, interestingly, even though these were higher, the VIX also went higher. So there's the VIX right there. Bonds, TLT, I'm going to look at in a minute. That actually went down. There's TLT, not looking too good. Commodities were all going up. Gold higher, silver higher, oil higher, natural gas higher, gasoline actually higher, but kind of flat, and corn went up as well. And then, of course, crypto, there's Bitcoin pull back a little bit, and Ethereum pull back as well. So all of the crypto space, they actually went the opposite of the market today. All right, real quick, we'll look at the sectors: energy, materials, utilities. These are kind of defensive sectors, but technology is number 4. So that is a aggressive sector, but it's really been volatile the last few weeks. And at the bottom, discretionary and communication services are 2 aggressive sectors, and they are underperforming the rest of them today. Down here, the one that looks interesting, these are the top 10 industry groups. Renewable energy down here is number 9. And as I showed last week, and we'll do this right now, if we go to breakpointtrading.net, the website, click on the charts page, you can see all the industry groups right here. Renewable energy actually was the worst performer last week for the week, but today it actually is in the top 10. So let's take a look at the stocks that are in this. And let's sort it. You can sort it by the day. We can sort it multiple different ways. These are the ones that outperform for today. Solar Edge is up there. Plug Power, Enphase Energy, NXT, Next Tracker is up there for the day. Let's look at it for the whole week. So for the week, we've got Solar Edge, looks like the one that's really outperforming, and it's really coming off a bottom. So all of these stocks might be ready to start climbing higher. They're all really at the bottom, though. They really don't look very good, frankly. There's a charging company, Plug Power. Let's see, NXT is down here. This one looks better than the rest. So it's heading higher right there. So that's one way that you can, if you do see industry groups that are outperforming, however you choose to do that. I do it on my dashboard right here, but you can always come to the website and just check them out. This little box next to each one of these. For semiconductors, of course, you can check the box, see which ones outperform today. And of course, Intel is really heading higher. It's really breaking out today. And it's coming off the bottom as well. So the rumors of a buyout for Intel might be on the table. Micron is down here too. We're going to look at Micron in a minute. So anyway, that's one way that you can do it using the website. All right, the next thing I want to do is take a look at some of the stocks. Actually, let me look at relative rotation real quick, because I know folks like to take a look at this. There's the rotation of the sectors. Technology looking really good. It's about to move into the leading sector. Communication services and discretionary. Discretionary is solidly in the lagging quadrant now. Industrials and energy are as well. You can see utilities made a U-turn and it's heading back down now. Staples is heading down, real estate's heading down. So some of the defensive sectors are starting to roll over. Rotation, this shows you rotation out of those. This is another way to look at relative strength. So relative strength ratio is everything to the right of this center line. So everything over here, and this is comparing it to the S&P. So everything over here has relative strength stronger than the S&P. And it shows you the direction that it's heading. So these are heading back towards the left, which means they are weakening relative to the S&P. And technology is strengthening, even though it is not stronger yet, it is strengthening. And then the center line across the middle is momentum. How much momentum does it have as it's moving or rotating? So that's another way that you can look at relative strength, by looking at this relative rotation of sectors. You can do it with stocks as well, using stock charts. Okay, so let's take a look at some of the stocks that people ask me about. And the way, let's see, do I want to use that one? Or I think I have another one. Maybe not. All right, we'll use this one. This will show us the daily. It shows you actually it's going to show relative strength over here too. So this is going to be one way. I'm going to show you another way to view relative strength, and that is using a comparison or a calculation. Basically, it's dividing in this case, the S&P versus the industry. Now, S&P doesn't have anything here because it's a cash index. So once we get it and look at the stock, and I'm going to put some in here in a minute, and you'll see. But each of these is another way to look at relative strength. And this is the way that I like to look at relative strength on stocks, to see how they're doing versus their own sector. So the first thing I'm going to look at is I'll look at TLT, even though it doesn't have an industry or a sector. So it's not going to show you relative strength other than against the S&P. And you can see versus the S&P, it is underperforming. So that means you'll make more money by being in the S&P than you will in TLT. And it's underperforming by almost 9%. Just looking at the stock, the chart itself, it is trying to make a rally right here, but it's heading back down. So it's sitting right in the middle of its channel, and that means it may head further lower. The momentum is rolling over right here. The ADX line is the red starting to cross the green at the bottom. So all of these are not looking too good for TLT. So those that are interested, TLT is the 20-year bonds. For those that are looking to get into this, it's a little risky right now, I think, to take a look at it. Even on the weekly chart, the moving average lines are below, so they're moving lower. And if you just draw a trend line across this, it's also moving lower. So I think it's a little too early for TLT, but you can watch these things and see when it starts to reverse and move back higher. You like to see it coming up from the bottom like this right here, rather than coming from the top and going down, getting ready to cross over. So might be a little bit early for TLT. All right, let's look at some stocks. One that someone asked me about was Rocket. So in this case, now we are, doesn't have the calculation for its industry group for Rocket. Hoping the other ones do. We'll see. Might have to go to a different view. In fact, let me try one more before I continue on this. Let me try MU, Micron. Okay, Micron's working, but I'm going to use another one anyway. So let's go back over here and take a look at it using, we'll just look at Rocket again. See if it shows it to me here. So this is just the standard stock charts in this case. So Rocket, first of all, it's starting to make a move off the bottom. It looks like it's a character change. So lower lows and lower highs through here. It's starting to make higher highs and higher lows. Instead, it has a hammer right there, which is a reversal candle. It's still below the 200-day moving average, though. So it really needs to get above that to confirm that it's going to maintain that uptrend. But I have one of my views here is, so now it does have relative strength. So now you can see the first one, the blue one, the first two are the ones that I like to look at the most for relative strength. The first one is, how does it do versus its own sector or own industry group? How does it do versus its peers? And the industry group for this is mortgage finance. So Rocket Mortgage is underperforming its peers. There's the zero line. So, and this is over basically a 3-month period. Yeah, 3 months and 5 days. So it's basically a 3-month period. So over the last 3 months, it has underperformed its peers, but it's improving. It has underperformed the S&P, but improving slightly. Its industry group, its sector, financials, is outperforming the S&P slightly. Its industry group, mortgage finance, is underperforming its sector, financials, and its industry group is underperforming the S&P. So ideally, you want to see all of these above zero, but the most important two are the first two. You like to see it outperforming its own peers and outperforming the S&P. And this is what I meant by, if the market does start into a bear market, when it gets near the bottom, this is the way to find strong stocks. And I'm going to show you how to create a search to do that as well. So Rocket looks like it's trying to recover, but it still has a lot of work to do. That's what it looks like on a longer term basis. You can see just a really long downtrend. Of course, right here, you don't know if it's starting back up, but it looks like it started back up right there. Earnings are on the 27th, so that's next week. So that's a binary event. Based on this, I would be very careful with earnings. And by the way, that's another way I like to use relative strength. As stocks go into earnings, there's a quiet period where analysts can't talk to the company, usually about 3 weeks before earnings. So somewhere in this area here, you can see it's just been going sideways. What I like to look at is the relative strength versus its industry group, because that sometimes can give you a clue if what the analysts heard previous to that is causing them to accumulate or add positions. And the top up here is the accumulation distribution line, which I did a Technical Tuesday on last week. So if you're interested in that, you can go back and take a look at it. And accumulation distribution certainly looks like it's improving. It had been in a long downtrend though, but right where this reversal started to happen, accumulation distribution looks like it's starting to move up. So there could be signs that Wall Street thinks that there might be good earnings next week, but it's still a binary event. So something to be very careful of. Okay, the next one is UDMY. They had earnings already. They had earnings on the 13th, so last Thursday. Obviously, great earnings. They took off. Still sitting up there. You can see right here. Right here, it was actually just before earnings, it was slightly below, underperforming its peer group. Its peer group is software. So it was underperforming software, but because of earnings, huge volume, and now it is outperforming. It's outperforming the S&P. The sector, which I showed before, technology is just beginning to outperform the S&P. However, software has been underperforming technology. So industry is underperforming the sector, and it is also underperforming the S&P. Now, as I said, it's ideally you want to see all of these above zero, but most importantly, these two. So right now, this looks really good. There really wasn't any great clues other than it getting above the 21 day. And that's usually the point where I like to buy when it gets above the 20. If it's something that I'm watching, when it closes above the 21, which would have been right there, then that might have been a good time to get in. But right now it looks great. So let's take a look next at Zeta. Zeta, kind of the same thing, coming off the bottom. It's above all of its moving averages. However, accumulation distribution is declining. Now, what this means, as I explained last week, doesn't mean that the stock is going down. It just means that it's closing the days at the low end of its range. So you like to see Wall Street stepping in and buying at the end of the day, and that's what makes the accumulation distribution line go up. However, in this case, it's not. In fact, it looks like they might be selling. We're going to look at this on an intraday basis in a second. However, it is definitely above. Not only is it well above beating its peer group, which is also software, it is beating it by more than 35%. In fact, about 37% right up here. So it is handily beating its peer group. It is handily beating the S&P by more than 30%. Its sector is outperforming the S&P, but software is underperforming its sector and underperforming the S&P. So the bottom two are the ones that I put the least weight on. The top two is the most weight, and in this case, they look great. Now, this looks a little worrisome. They report also next week. So it looks to me like, since Wall Street couldn't talk to them, but I think that Wall Street's seeing a lot of good things, then it's moving up. But a little concerned about the 25th is next Tuesday. So a week from today, basically, is when they report. Now, let's look at this on a intraday basis. Look at this on a 30-minute chart. And one thing I put on this 30-minute chart now, all of these over here are shortcuts that you can set up in stock charts. And I have some on my website already designed. I'm going to probably update those soon because I change these as I find new and better ways to do things. So on the intraday chart, and let me add volume to this just to get a sense for what the volume looked like today, whether that was near the beginning or near the end of the day. Put it behind price. So there's volume. I'll put volume color volume on it as well. And I'll make showing you things you can do with stock charts. I'm going to put a horizontal line of 21-day and make it blue. So the 21-day average of volume. Oops. Should be a colon. Blue. Oop, that still didn't put it on there. That's because I put it in the wrong. No, it's on volume. Behind price. Oh, well. Should have put it down here, but that's all right. I'll leave it on there for now. So what we can see now, this is today, section over here. So that's today. And look at all the volume in the beginning. So big gap up right to start the day. It's been moving up every day. It gaps up. in the beginning and then moves higher. Now, in this case, at the end of the day, it moved lower, so it came down. But most of the volume during this downtrend was very low. It was way down here. So that's actually a positive sign. Did have a little bit of negative volume right here, but it didn't close just slightly lower than the 30 minutes. This is a 30-minute chart. So each of these bars represents 30 minutes. So even though it pulled back during the day, it did so on really low volume. And then at the end of the day, it had a little bit of a spike. So that's telling me that it could be that the people that were buying were holding on, not selling. Some people sold, but not too many, not much volume. If we look at Friday, same thing. It gapped up on huge volume, had some nice volume in the middle where it went up again. And then everything else just going sideways the rest of the day was on very low volume. So it looks like the buyers are winning in this case for Zeta. Actually looks positive going into earnings. So it's up to you if you want to hold into earnings. Next is Micron. Micron just continues to go higher. This is the intraday chart, by the way. So same thing, gapped up, but it continued to go higher all day long. So this one, if we go back and look at it, back with the relative strength, you can see right here, outperforming its peers, outperforming the S&P, outperforming the sector is outperforming the S&P. The industry group, semiconductors, is just slightly below its sector, but it is outperforming slightly the S&P. But these two are the important ones, and it looks pretty good. Had good volume today, had a great day today, and it's sitting right at its 200-day moving average. So this has gone up, came down, went up, came down, and went up again. Right now, it has a character change. So if we put a line across the bottoms here, you can see right there, higher lows. This one would be across the top. So that's the resistance line right there at about 110. But the last time it came down, it didn't come down as low as this time. So it's putting in higher lows. That's a character change. It needs to get above that 200-day. And if it does, its earnings are on March 19th. So there's still plenty of time. This could be the breakout moment. But of course, all these people back here and all these people here are just looking for a place to get out, break even. So we'll have to see if they do that again. It could pull back slightly before actually taking a run at breaking out of that. Accumulation distribution the last couple of days actually looks pretty good, but it's not back to its highs from back here. It's really kind of just in the same place it was through this period. So this is really the test for Micron. The next, probably this week, is a big test. We're going to look at Micron. I think it's on the list tomorrow. We'll look at it for the Max Payne report tomorrow. We'll see if Micron is on there. But overall, it looks pretty good. Okay, so the last one I'm going to look at, and then I'll get in. I've kind of been doing relative strength with you as we go through these. We're going to look at gold. Now, gold doesn't have an industry group, so it only has relative strength versus the S&P. But you can see it is definitely outperforming almost by, it looks like about 9%, outperforming the S&P. So it's a better place to be all the way back to December. So starting in December when it went above zero, it's kind of bouncing right along zero through this period. But really the beginning of this year is where it started to take off. And there's the short-term and the medium-term signals are right there around the middle of January. So that would have been the time to get in. It's continuing to move higher. And even when it pulls back, it doesn't pull back very much. So gold actually looks really good. The accumulation distribution looks fantastic. The volume is picking up. So, I would say gold isn't showing any signs that it might be rolling over. We look at it on a much longer chart, you can see it's just going parabolic. Now, it's always dangerous when it gets that far above its moving average lines. It actually would be healthy for it to pull back down to the 21, down in this area here, about 262, 260, roughly. And it could go all the way back down to the 50, but it doesn't look to me like that's going to happen. It looks to me like it's probably going to come down to, if it does pull back, somewhere in this area right in here. So 257, a little bit below the 21 day. So somewhere in this range right through here, somewhere in this range, it's probably where we'll pull back. I'll say that would be healthy for it to pull back to there. If it does do that, it would be a great time to get in. It could just keep continuing to go higher, but rarely do any securities or anything that moves like this get that far above its 20 and 50 day. You can see it made it pretty far above over here. Both of them, it's actually higher than that now, much higher. Over here, it got quite a bit above the 21 and way above the 50. And then you see what happened over the next month or so. It came back to the 50. So that could happen again. It probably would be healthy for it to pull back into this range around the 260 area. So that's what it looks like for gold. All right, the last thing, that's all of the stocks that people asked me to take a look at. The last thing that I want to show is a different way of looking at relative strength. And that is by, and this is actually on my website on the charts page. There are some relative charts down here. So these are all different ways of looking at relative strength. But the one I want to look at is looking at these different things. The S&P, the NASDAQ, gold, Magnificent Seven, their year-to-date performance. Now, in this case, relative strength is basically setting a date, and the date in this case is the beginning of the year. So ever since the start of the year, this is what something that stock charts allows you to do. This essentially will give you the ability to identify a particular date. In this case, I just set it for January 1st. And it shows you the strength of all of these components as of January 1st. So clearly you can see gold outperforming ever since the beginning. The next one is the equal weighted NASDAQ 100. The next green one down here, and it is significantly outperforming the cap weighted NASDAQ 100. So this is where all of the big cap tech stocks are. And this one basically weights everything in that all 100 of the stocks in the NASDAQ 100 weights them all exactly the same. So it basically removes what the Magnificent Seven have been doing last year, which was leading the market up. It basically removes their advantage and just equalizes everything. And then the S&P is right below that. The next one is the equal weighted S&P. Now you can see in this case, it's not as different, even though those big cap tech names are part of the S&P, but the S&P is 500 stocks. In this case, the equal weighted version is keeping pace with the rest of them. But equal weighted for the NASDAQ is significantly outperforming. And then the last one down here is the Magnificent Seven. And now you can see why it looks like this, because the Magnificent Seven now has really been struggling. In fact, other than this period right through here in the middle of January, it's really been on a downtrend. So most of those stocks in the Magnificent Seven are trending down, and it's pulling this whole ETF down with it. So this is one more way that you can find relative strength. And then finally, you can create a scan for, there is one other thing. There's something in stock charts called slope. So you can identify a slope, and basically it just gives you the strength of the trend. So it's kind of relative strength. In this case, I used SoFi, so you can see clearly it's been going up. And all you do is down here under indicators, just put in slope, and the parameters tell you whether it's short-term, medium-term, or long-term. 100 is a medium-term slope. You can put 20 in for short-term, 200 in for long-term, but I'm just using 100 for the medium-term. And anything above 0 means that the relative strength of the trend is strong. And you can see right in through here where it's first one above that area in September. That's giving you the signal that this is beginning to the strength of this trend is starting to move higher. And that's exactly what happened. Right now, it's actually kind of rolling over because it's going sideways, but that's one way you can do it, just using slope. One thing you can then add to it is the relative strength index, which is relative strength to its past performance. So in this case, it's going to look at the strength of this particular stock. And I did a whole session on relative strength, so you can go back and find that in the Technical Tuesdays. But right here, through this whole uptrend, you can see its relative strength has been really strong as well. As long as it's above 50 and really about 40, so I can go down here to the RSI and put in a horizontal line at 40, make it pink, and there's 40. So as long as it stays above 40, then relative strength is still strong. So a lot of times when it gets up above 70, it can stay above 70 for quite a long time. Just because it's up there doesn't mean it's time to sell or get out. It just means that the trend is really strong. When it starts to come down, that means it might be weakening, but it could just go sideways. So you want it to be above 40. As long as it stays there, then relative strength is still good for that one. All right, so let me show you how you can create a scan looking for stocks that have strong relative strength. And this is something that I do every week. I run it against all of these. I'm only going to do it for the S&P 500 tonight. But when I run this every week, I run it against the S&P, the NASDAQ. I run it against all of these top 10 lists that I put on the website every week. These get updated every week. So I run it against all of those. And on the chart list and scans page, on the left-hand column, about halfway down, there are the relative outperformers for last week. So this is the scan that I'm going to show you. Last week, there were 273 stocks that satisfied the scan that I'm about to show you. So what this does is I'm going to look for the S&P 500. I also do it for all of these, but tonight just do this S&P 500. I'm looking for percentage relative strength over the last 65 days, basically one quarter, versus its own industry group, more than 10%. So remember that blue panel when I showed you Zeta was about more than 30% outperforming its industry. That's what I'm looking for. I'm looking for stocks that have more than 10% outperformance of its own industry. And both of these have to be satisfied. Relative strength over the last quarter versus the S&P by 7%. So both of these criteria must be satisfied in order to make this list. So now let's take a look at what this list looks like using that scan. And you can see the relative strength over here. I don't know why this didn't work before, but we'll see if it works this time. So I'll go over here to my scans. There's relative outperformers. That's the one I just showed you. That's that one right there. And I'm going to run the scan and see what we get. All right, so AbbVie, I'm not going to do all these, but I'll look at them one at a time. So remember, this is over here is the last quarter. So the blue panel, it's outperforming its peers and just beginning to outperform the S&P. So in just one view, I can see it's near the top of its Keltner, so it might not be a good time to enter right now. But everything else looks pretty good. And on the weekly chart, it's right up here at resistance, but the momentum is starting to move higher. So that's the way we look at these. Here's Airbnb. Just outperformed its peers because of earnings. Earnings just came out, so it's outperforming both over here, way above its Keltner channel. So it's probably going to go sideways for a while and let all of the moving averages catch up. Let's see what else over here looks interesting. Akamai made the list. So remember, all of the ones on this list have outperformed their industry group and outperformed their the S&P. There's Broadcom right there. Axon, it's been looking really strong. It's right near the top of its Keltner channels, by the way. So it looks like it's breaking out on the weekly chart. but probably needs to take a rest a little bit, but it's had a really good run all the way up here. This one's been really strong for quite a long time. 94% outperformance of its industry, of its peers. So you can't really get much better than that. Here's Boston Scientific. See what that looks like. Outperforming its peers by 13% and the S&P by 14%. Costco on the list. You can see up here it's reaching the top of its Keltner and it's starting to pull back now. Momentum is rolling over, so this one may pull back, come back to the mean down here around 110.16. But you can see outperforming its peers by 30% and the NASDAQ by 13%. CrowdStrike. Same thing. CrowdStrike is at the top of its Keltner channels, outperforming both 37% versus its peers. What else? CVS, both 6% for the S&P, 22% versus its peers. DXCM is on the list. That looks good. Outperforming both by 20%. It has a shooting star candle in the 3x area of the Keltner, so this could be a reversal candle on this. It just had earnings on the 13th. So earnings were great, but it looks like it might need to consolidate a little bit, sitting right at the 50 on the weekly chart. What else we have? F5 Networks. Very strong outperformance of its peers, 35% on the S&P. That looks great. I always like to look at this center one here to see whether it's a good time to get in or just hold, let it go sideways for a while, let the moving average, the 21-day, catch up to it. Ideally, you'd like to get in down here when it's just pulling back to the 21 and starts to move higher, ideally. Fortinet looks great. GE. Okay. Let's go to shooting star candle 2. GE Vernova, one of the spinoffs, sitting right in the middle of its range right now. So 68% outperformance of its peers. Renewable energy. I showed you that one before. It's in the top 10 this week. And it might be just, momentum might just beginning to start to move up. So this might be a good time to get into that one if you're interested. What else? Howmet Aerospace has been great. It's been heading higher. IBM, it's been looking good. Not outperforming significantly its peer group, but the top of the Keltner. Let's look at Intel. I bet Intel's all the way up there. Yeah, Intel's way above its Keltner channel. So Intel is just going parabolic now, just heading straight up. And all of the indicators look like this run might just be beginning. So there could be a pullback on this for those that are looking for an entry. Last week, Friday would have been a good time. I'll just glance through the rest of these. Meta is on the list. As you would expect, Netflix, Palantir. Now, if we go into at some point, I don't know when, it doesn't look like right now. There's no indication right now that's going to happen. But if we do go into a cyclical bear market, when we get near the end, this is a good scanner run to find stocks, and there won't be very many. Right now, there are 61 stocks on this list today. These are the ones outperforming the S&P. There's Starbucks, here's SMCI, but at the bottom of a market, SMCI is just getting up to on the weekly chart, but it's just the momentum and everything is just moving higher. So this might just continue going up, just beginning to outperform its peers, by the way. But at the bottom of the market, this is what you want to do. There won't be very many, but you want to find the ones that have been outperforming because those typically are the strongest ones. Those are the ones that will perform well as the market starts to recover. Here's Walmart. Outperformance of its peers by 40% and the S&P by 22%. So that's one of the best ways to do relative strength. And I'm going to close on that one. So please like and subscribe. I want to try to get us to, I think I'm near 850 subscribers. Let's try to get over 850 if we could. For those that like this and want me to continue to do this, let me know if there's any stocks you want me to look at. Be happy to do it. And or any other topics for Technical Tuesday as well. But that's kind of an overview of how to look at relative strength and different ways in order to do that. So thanks for watching. Have a great night and good luck for the rest of the week. Tomorrow we will do the options expiration. Max Payne, see what's going to happen. Thanks, everyone.